All right, all right. Let's pick up where we left off last week as we did some analysis. So, welcome back to another session. I get excited when things work out the way I plan for them. So I take my positions accordingly. I know for beginners, I tell you to stay away from reversals, from counter uh, trend trading. Right now, the trend is upward. Always good to look at in the grand scheme of things. Upward momentum. We had some significant pullback both in the SPYs and the Qs. I like to just recap. In the Qs, we went deeper than the SPYs. We went to 61.8% retracement. In the SPYs, we only did 50%. And another interesting thing that I haven't talked enough about in the Qs, we tested the 61.8 multiple days, multiple weeks. But in the SPYs, it's just one time. That's one time that we did that. So the SPYs held up much more strongly. But in the grand scheme of things, upward momentum, we tested the 50%, then we recovered that upward momentum. So when we come down to our hourly chart, I want to keep maintaining this upward momentum. As beginners, we don't do counter trend, right? As we get more and more sophisticated, we use the supply zone to do a reversal trading. But for now, we say, hey, when we see a pullback, we want to take advantage of it. Do we see a pullback green to green? Our sweet spot right now, we're remaining above 23.6. This it seems like a big pullback, but remaining above 23.6. So it's quite amazing in 96 bars in 96 trading hours. We've only gone down a little under 4%. But we're above the 23.6 retracement. Now, where do we take a position to keep that upward momentum going? And we have the supply zone that we're looking at. So maybe we switch to a daily to kind of identify the next supply zone. I always like to leave areas for this discussion before I mark them. The actual supply zone is up here. This is a supply zone. So in this area here, this is where we are expecting the next headwind. So in that space, we've come down above 23.6. I said we're gonna close this gap. Last Tuesday, here, I said wait for this gap to close, and this gap is completely closed. Friday, you can consider it closed because we went below the halfway mark, but it kept making lower highs, right? It kept making lower highs. So this was not a time to jump in. We did not see on Friday's closing this gap. We did not see a higher high, higher low action, right? So this did not happen. What is happening is from this momentum, we just keep having lower high, lower low, right? This is what we keep seeing. So this is what we keep seeing right now. Lower high, lower low. So we're not ready to take action. Even last week we marked this, what kind of pattern we're looking for. Gap to close, get back above the gap, and use it as support. We're not seeing that. Lower high. So we're not out of the current pullback. My sweet spot always is green to green, so I'm hoping for us to come back to this green area. So similarly in Qs. In Qs, we actually closed that gap quite early. However, we're still staying above the 23.6. So now we still want to see what is our next action. We have this kind of demand zone down here that we have also closed. per se. I mean, so in demand zone, I don't have this 50% rule for me for demand zone. Is as long as we touch it, I feel like we're there. But again, we're not seeing. So I'm going to remove these drawings. They're no longer useful, but see what we wanted to see is when we close this demand zone, where we come and collect additional demand. If there was heavy demand, where we would see is now this action here. So we're almost there. If price reverses from here, that means this demand zone was very strong and we're back up in business. But for now, we're just going to watch and monitor because we're not doing a counter trend, right? We're just monitoring. If we look at the futures, they're not telling us much. Key thing is what's tomorrow? This is tomorrow, right? This is a very, very critical. You see it as red, so this has a tendency to move the market in any direction. It moves it significantly. What are they doing with interest rate? Inflation a few weeks ago seems to be under control, and then it says, oh, it's really not under control. So what are they going to do? What is the guidance that they're going to give us? Are they hawkish, dovish? That will really tell us which way we will see the market go. So today was really a very cautious day because of tomorrow. It really, if you were to take any position tomorrow, it has to be at the open until Powell speaks. And what I mean by until Powell speaks is we don't pull the trigger until then. Is that we pull the trigger at the open, and by the time he speaks, we've already closed that position. Right? We're already out of that position, unless we have made some significant gains where we have a small percentage that we let run. Even if that goes to zero, we're okay with that. Those are some of the things that we're going to look at. So with that, I'm going to ask a question, but I hesitate asking this question because I dread the answer. But did you take any trades this week?
No, I did not. Not yet, at least.
That's good.
I'm on,
That's good, right?
I'm on a pretty good streak, so I wanted to keep it going.
Yes. And knowing that last week when we were here, uh, let's see, this is all. So, so like this. When we were here last week and we discussed, and I said, hey, I believe the market is going to close this gap before it does anything. When we were here, I hesitate and stay away from long positions, right? Even if we want to talk about puts short positions, it's kind of difficult to take a trade down here because we've already missed the move. We've already missed the move. So one could say, I expect this gap to close 2 days in a row. We failed to do that. So at these railroad tracks, best case scenario, and again, I'm not saying you should do counter trends, but if anybody's watching who's a little bit more sophisticated and more advanced and have higher risk tolerance, you don't even get your 2-for-1 risk reward ratio because the entry is so low and the stop is so high. But keeping stops really, really tight in these scenarios because the move has already happened and I want to exit at the 50% of that gap. Yes, this is like a 1.33 to 1 ratio, but I take this trade anytime, right? Because that's the expected thing is like it could stop here. And lo and behold, it actually dead stop right there at that 50%. It opened below it, it played around for just a tad bit, and then it recovered, even though today we blew past it. Why? Because we are making this trend line here, which is lower. very, very key to keep maintaining these lines and understanding that when we have lower highs, it is not time to enter, right? If excuse me, if we have, sorry, so the only way we would enter on a position like this to the upside is I want to see that trend line broken and tested as support, right? Because we have an upward bias in the big picture, this is what we do. And if there's any sort of fear, economic fear, we just stay away. Not losing money is also part of success. Right? We stay away when we do not see the stars lining up in our favor. Right? The trading is about stacking the odds in my favor. And the only way I do that is I have a system and I stay within my system. I don't force the trade. Right? If I stack it in my favor, all the odds are in my favor, then I pull the trigger. And even if I'm wrong, I'm okay because over time, my system works. Because that's what I'm trying to teach here is that consistency. And so we started the key part. We started with the basic zigzags, right? That's why we do zigzags. Is even though we have a more sophisticated entry because we have the fib retracement, fib extensions, we use chart candlestick patterns. All of those things really hinge on understanding zigzags. When we're seeing lower highs, no way we should enter a long position yet. Right? We need to start to see that reversal. So I'm very happy to hear you, there was no trade last week based on this, based on upward momentum, shallow pullback. We close this gap, yes, but we're in no hurry. When we see green to green, we get more comfortable, more excited. It was so far shallow pullback, and let's see what Powell has to say tomorrow. And so, really, as you think about that, if since we're not talking about any trades, uh, today's lesson is really short because it's just a repeat of what we've been monitoring. So, how do we set up for a successful trade after Powell is done speaking? And that's really the key part. So, what I want to see is we want to break above here, right? That's what I want to see. Or we're going for some other demand zones. And we have a lot of them down here that we can go after, right? And I want to start to see this high, low pattern happening at some area of value. Right now, our area of value for the SPY is the gap. For the Qs, the area of value is demand zone, right? So this is the same pattern, doesn't change. Higher high, higher low, lower high, lower low, in whatever direction we want to trade. That pattern never changes. If we see that pattern come into the picture, that's when we say, oh, this pullback is terminated now because I'm starting to see the opposite side taking place in my zone. Right? Whatever zone that is, right? For me personally, I always say green to green is my zone. That's why I mark it as green to green, and that's the 38.2 to the 61.8 retracement. That's the sweet spot for me. I'm more comfortable to take those trades. Above the 23.6, really above the 38.2, I always hesitate. When I hesitate, it's not a good idea to take a trade. If I do take a trade, I lower my position size because what I'm interested in is my green to green zone. What I want to teach is for people who have a day job, you don't have to trade every single day, but when you do trade, you have to make it successful, and you have to work on that. And again, I'm not subscribing to 100%. I will never say 100% success rate. I say success is over a period of trades, your account is green. To me, that's what success is. Even if it's by 50 cents, your account is green, that's successful, right? Then we go, how do we increase that percentage to where it's not just 50 cents, it's now significantly more. And the way we do that is our risk reward ratio. If we do 2-to-1 more times than we do the 1-to-1, then our account will grow significantly faster. If we're afraid and we're exiting, right, this 1-to-1 ratio is okay if you plan. Just let me refresh your mind. I said here, this exit here, right, depending on where you enter, somewhere a 1-to-1 ratio in this kind of scenario is acceptable, because we're intentionally entering that position for this risk reward. But if I'm entering, if this is my entry, let's see, let's just say this is my entry, just a random number. If I'm saying this is my entry and my exit is somewhere down here, right? Somewhere, let's just say somewhere down here is my exit, and I'm exiting prematurely. But if I'm entering here, and I just want to make it more realistic, like show it too. So if I see, here's my exit, right? Here's where I want to exit. As soon as I have this gap down, I exit. That's fear, right? That's not based on anything. I just created this gap. If I don't see anything that shows me I'm trying to close this gap, if price opens and it just keeps pushing down, then I don't need to have fear, right? I just keep that at least 2-to-1 ratio in play. So that's why I say 1-to-1 deliberately, yes. Out of fear or greed, no. Let's maintain those positions. So spies, Qs, really similar setup. It's just the area of value is different. For the Qs, it's the demand zone. For spies, is this gap. Technically, this gap is gone. I have this demand zone down here. That's what I'm going to look for. I can also use this one here. So maybe price wants to come down to this area, right? So we don't know yet. We have yet to see. So I like how it's setting up, and no rush. We just wait. Let Powell speak tomorrow. Thoughts, question?
Yeah, no questions. I was just gonna also add, there's also another, I think, fairly big market mover tomorrow, which is NVIDIA earnings that people have been anticipating. So after
that the Nvidia earnings will have a big effect on tech. It's expected next week, not tomorrow.
Oh, it's next week. Okay, got it.
It's next week Wednesday. But keep in mind, Powell will move the market significantly more than a single stock. However, with a company like Nvidia, if whole AI expectation could go in that direction, right? So it could impact spies, queues. It could have that impact. So today they had a good day. Actually, yesterday and today it's not bad, right? So when the rest of the market, even when the queues are heading down, there's anticipation that there's a run up for earning, right? There is anticipation that they will do good, so they will either pump and dump it right before earning, and if they don't dump it and they hold it next Wednesday, Thursday, then they're expecting it to keep going up. So some telltale signs there, right? We'll look at the options. If they keep adding positions, the expectation is one direction or another. All right.
Okay.
Short video for today. And we will reconvene next week.